Hi, welcome to my channel. I'm Gil Rossi, investor and funds manager. Today I want to share with you my update of Adobe. They just reported fourth quarter and fiscal year 2021, and also the analyst day, and the stock got really hammered, probably 15% over the last 2 days. So I just wanted to check what was happening with the company, whether there was any merit on that 15% or more drop, and whether it could be a potential buying opportunity. So this is what I want to share with you today. This is what has happened with the stock. As you can see, it was 700 roughly in mid-November, and now it's 556. So this is a big drop, and as I said, probably could be a buying opportunity. This is what I want to see. The fourth quarter report was, if you see, the headline was quite good. The 7 billion in operating cash, and then estimated addressable market for 2024 going to 205 billion from 137 in 2023 previously, or for 147, yeah. But then when you start digging a little bit, if we go to the fourth quarter again, financial highlights for the year, revenue was 15.8, which was a 23% growth, which was good, and 25% growth of digital media, and document cloud 32% growth. To me, this was quite good, because we have seen DocuSign a bit soft, the report, and but well, apparently it's not hitting Adobe that much, and 24% and a digital experience. So all of that growth over 20%, it's quite good. And if we go to the fourth quarter financial highlights for the fiscal year, this is where I think some issues start to appear. The ARR, or annualized recurring revenue, increased 571 million, which included 29 million from the acquisition of Frame.io. And if we go back to the third quarter press release, when they were offering their targets, you see in revenue 4.07, and the actual was 411. This is okay, but if you see here, the digital media annualized recurring revenue, 550 million was the target, and the actual was, as I showed, 571. But if we subtract the 29 million, that's 542. So they missed this number. To me, that's so far not a big deal, really. It's a very small number. This is quite volatile, and if you see from the analyst day presentation, everything here has been improved dramatically from what they have targeted, if you see it on a financial year, not on a quarter to quarter. And here we have the annualized recurring revenue, which was higher by 230 million, even with this miss of a few million in the fourth quarter. Of course, it could show a deceleration, but we will see. If we see back to the fourth quarter, and we see the targets that they are providing for the fiscal first quarter of the next fiscal year, and also the next fiscal year 2022, total revenue 17.9 billion, which is 14 to 16% growth, much lower than the 20 something that we just saw, and the consensus here was 18.2, so softer. So there is another issue for analysts. Again here, ARR 1.9 billion, and the consensus was 1.972. Yeah. To me, this is like not a big difference, but analysts like to do it precisely, you know. So if it's 72 million of miss, that's a big deal. Even though if it's in 2 billion, you know, we're talking about 2 billion, 72 million is less than 5%. It's not much. So then we go to this another this is for the quarter, 400 million net new ARR, and the consensus was 413. So all this softer, and of course that could be why the stock has been hit. I mean, that is why the stock was hit. But to me, this is the most important thing that I saw in the whole presentation. The Analyst Day in 2021 shows the new addressable market for 2024. And as I said, before it was 147, if you add this, and this for 2023. And now if you add this, and this, is 205 billion. So a dramatic increase, and if you see the increase is this 54%, 52%, 29%, and overall 40%. So quite a dramatic increase in the total addressable market. And of course, if you have a 40% higher addressable market, of course your revenues are going to be higher as well, not by 40% probably immediately, but eventually. And otherwise you're going to lose market share. And I don't see Adobe losing too much market share, at the minimum maintaining it, you know. So this is what I'm doing for revenues. This is the actuals. I had to increase the percentages, which were much lower before to me. Well, this is what they are projecting. I'm using a little bit lower here. And if you see, this is a total addressable market for before. It was 147, as I said. And this would be the market share of the company. So if we go to the new addressable market in 2024, this would be the market share, assuming this growth here for this year. So I jumped the growth of this year to sort of like keep a market share not dropping that much. And then from here I taper it to 10% over these 6 years. So this is my revenue assumptions. And if you see the EBITDA, this is going to be the EBITDA for 2030. This is the one I'm going to use for my valuation. On the free cash flow, also, if you see before and after, before I was assuming 6.5 billion of operating cash flow, and they came with 7.2, a much higher increase, and I was using 15% growth. Now I'm using the actual one. So I'm going to use this one and then taper it, and also make a jump here because of what I did in the revenues. So following the revenues. And I think this is I am normally more conservative than most analysts. In this one I am a little bit more optimistic, let's say, but not that much. I think, as I said, the addressable market information that they gave is, to me, it's quite good. And then let's go to the fair value and IRR calculation. I use the EBITDA that I computed and the free cash flow. The free cash flow here is 23.85 by 2030. So this is the one I'm going to use. These are the ratios. I'm using the same ratios as before. The debt, we come to the market cap, weighted average shares outstanding, and then that's how I compute my target price for 2030. I make an average of these two, and then this is going to be my new target price. So with that target price, this would be my cash flow if I buy at 557 that is trading yesterday or today, and this will give me an IRR of 12.93%. If I want to go to 10% or thereabouts, I could buy this stock at around 670 and still will make this return, which is reasonable. So this would be the new fair value for me. If you see before, back in July, my fair value was almost 500. so I have increased it because of the half a year more than we have, and also the time value of money, and also because of these new assumptions that I'm making. So that's all for now. I hope you like this update. I hope that you find it informative. Probably you find it as an opportunity to invest in Adobe. All the things that I've said about Adobe and all the analysis I've made back in July on the qualitative portions of the business, which I'm going to leave a link, are still standing to me. The company hasn't lost any quality in this past 6 months. In fact, probably it has improved. So all that holds. The only thing that's changing now is the valuation, which has improved, and probably it could be an opportunity to add a little bit to my portfolio. So okay, thanks very much for watching. If you like the video, please give it a like, and see you in the next video in a couple of weeks. Bye bye.